What if I told you that 2026 is going to be one of the most crucial investing years of the entire decade, and most people are going to completely miss it? The Fed has been juggling interest rates. AI is reshaping entire industries overnight. Gold just hit record highs. Real estate is doing something nobody predicted. And crypto? It's back and louder than ever. The investors who position themselves correctly in early 2026 are going to look like geniuses by the end of the year. The ones who waited, they're going to be watching from the sidelines again. I'm Mano, and in today's video, I'm breaking down your complete step-by-step investment plan for 2026. We're talking about where to invest, what to avoid, and the exact strategy I'd use if I was starting with $1,000, $10,000, or even $100,000 today. Stay until the end because I'm going to give you a portfolio allocation breakdown that you can literally copy and start using this week. Let's get into it. Before we talk about where to invest, we need to understand the battlefield, because investing without understanding the macro environment is like driving blindfolded. So here's what the 2026 landscape looks like right now. Interest rates. The Federal Reserve has been in a long rate adjustment cycle. After the aggressive hikes of the early 2020s, we're now in a phase where rates are expected to gradually ease, but not crash back to zero. This matters because when rates drop, borrowing gets cheaper, stocks tend to rise, and bonds become more attractive to lock in. Smart investors are positioning now before the full rate cut cycle plays out. Inflation. It's cooling, but it's not dead. Core inflation is still sticky in services, housing, and food. This means your cash sitting in a savings account is still quietly losing purchasing power every single month. Doing nothing is still a losing strategy. AI and technology revolution. This is the single biggest investing theme of our generation. Artificial intelligence is not a bubble, it is the new electricity. Every major industry, healthcare, finance, logistics, entertainment, is being rewired from the ground up. The companies building the picks and shovels of this revolution are where generational wealth is being created. Geopolitical tensions. Supply chains are being restructured. Energy independence is a national security issue. This is creating massive opportunities in domestic manufacturing, defense, and commodities. The bottom line, 2026 rewards the informed investor. Let's make sure that's you. The 5 best investment categories for 2026. Number 1, and this shouldn't surprise you, artificial intelligence and the broader technology sector. But here's what most people get wrong. They chase the flashy AI chatbot companies and ignore the deeper infrastructure plays. The smarter money in 2026 is going into 3 layers of the AI stack. Layer 1, the chip makers, the companies designing and manufacturing the chips that power AI systems. This is the foundation. No chips, no AI. Demand for these chips is projected to grow exponentially through the rest of this decade. Layer 2, the cloud platforms, the major hyperscalers, the companies providing the computing power, storage, and platforms that enterprises use to run AI at scale. These companies have moats that are almost impossible to replicate. Layer 3, the AI application layer. These are the companies embedding AI directly into products, healthcare diagnostics, legal tech, financial analytics, cybersecurity. This is where the real revenue growth is going to show up in 2026 earnings reports. My recommendation, don't try to pick individual winners. Use ETFs that give you diversified exposure across the AI ecosystem. Look for funds focused on semiconductors, cloud computing, and disruptive technology. Suggested portfolio allocation, 25 to 30% in tech and AI-focused investments. Number 2, dividend stocks and value investing. This is the boring part of the video, and it's also where the real money is made. In an environment where rates are gradually easing, high-quality dividend-paying companies become incredibly attractive. You're getting paid while you wait for capital appreciation. What should you look for? Companies with a long track record of growing dividends, 10, 15, 20 years or more. Strong free cash flow, meaning they actually earn the money to pay those dividends. Pricing power, the ability to raise prices without losing customers. Think utilities, consumer staples, healthcare, sectors that people need regardless of what the economy does. The strategy here is simple. Reinvest those dividends automatically. It's called DRIP, Dividend Reinvestment Plan. Over 10 to 20 years, reinvested dividends account for the majority of total stock market returns. This is how wealth compounds quietly in the background. Suggested portfolio allocation, 20% in dividend and value stocks. Number 3, gold and commodities. And before you roll your eyes, hear me out. Gold just hit record highs. Central banks around the world, especially in emerging markets, are buying gold at a pace not seen in decades. Why? Because they're diversifying away from dollar-denominated assets. When central banks buy, that's a macro signal you cannot ignore. Beyond gold, there are strategic commodities that tie directly to the megatrends we already talked about. Copper for electrification and EV infrastructure, uranium for the nuclear energy revival, lithium for the battery supply chain. These aren't speculative plays, they're backed by physical demand from real-world industries. Suggested portfolio allocation, 10 to 15% in gold and strategic commodities. Number 4, real estate, but not in the way you think. Buying a house right now is expensive. Mortgage rates, while easing, are still elevated. But real estate as an asset class is still one of the best long-term wealth builders, and you don't need to be a landlord to participate. REITs, real estate investment trusts, let you invest in real estate portfolios the same way you invest in stocks. And in 2026, the most exciting REITs are not office buildings or shopping malls. The real opportunity is in data center REITs. Every AI model, every cloud service, every streamed video runs through a data center. Demand is exploding. Industrial REITs, warehouses, logistics centers, and manufacturing facilities are seeing record demand as companies reshore supply chains. Healthcare REITs, aging population demographics make healthcare facilities and senior homes a long-term demand story. REITs also pay high dividends by law. They must distribute at least 90% of taxable income to shareholders. That means income and exposure to real estate appreciation. Suggested portfolio allocation, 15% in REITs. And number 5, and I know this is controversial, cryptocurrency. Before you click off, I'm not telling you to go all in on meme coins. I'm talking about strategic, disciplined exposure to digital assets as part of a diversified portfolio. Bitcoin has cemented itself as digital gold. Institutional adoption is accelerating. Spot Bitcoin ETFs have made it easier than ever for traditional investors to get exposure without touching a crypto wallet. The thesis is simple. Bitcoin has a fixed supply of 21 million coins. Demand is growing. Institutional allocators, pension funds, endowments, sovereign wealth funds are just starting to enter the market. Supply shock dynamics could make 2026 a significant year for Bitcoin. For the more risk-tolerant investor, selective exposure to Layer 1 blockchains with real utility and growing developer ecosystems can offer asymmetric upside. But keep this allocation disciplined. Crypto is volatile. It's a high-risk, high-reward component of a balanced portfolio. All right, let's bring it all together. Here is the complete 2026 investment plan I'd recommend based on your risk profile. For the conservative investor, 15% AI and tech ETFs, 35% dividend and value stocks, 20% bonds and fixed income, lock in rates now, 15% gold and commodities, 10% REITs, 5% cash reserve. For the balanced investor, 25% AI and tech ETFs, 25% dividend and value stocks, 15% REITs, 15% gold and commodities, 10% international diversification, 10% crypto, Bitcoin focused. For the aggressive growth investor, 35% AI and tech, individual stocks and ETFs, 20% small cap growth, 15% crypto, 15% commodities and energy, 15% REITs, 5% cash or options buffer. No matter which profile fits you, the key principles remain the same. 1. Diversify across asset classes. Don't put everything in one basket. 2. Invest consistently. Dollar cost averaging beats trying to time the market every single time. 3. Reinvest your returns. Compounding is the most powerful force in investing. Don't interrupt it. 4. Review quarterly, not daily. Obsessing over daily price movements is how good investors make bad decisions. Before I wrap up, I need to address the single biggest mistake I see investors make, and it's going to cost people a lot of money in 2026. Waiting for the perfect moment. I'll invest when the market corrects. I'll wait until things calm down. I'll start after the election, or after the Fed meeting, or after the next earnings season. Here's the truth. There is never a perfect moment. The market will always have uncertainty. That's literally the price of admission for the returns you're seeking. Time in the market will always beat timing the market over any meaningful investing horizon. The data is clear. The investors who stayed consistent through COVID crashes, rate hike panics, banking crises came out ahead every single time. Start today. Start small if you have to, but start. That's your complete 2026 investment plan. Let me know in the comments below, which of these 5 categories are you most excited about? Are you team AI stocks, gold, Bitcoin? Let's talk about it down below. If you found this video valuable, and I really hope you did, please hit that like button. It genuinely helps this channel reach more people who need this information. And if you want a deep dive video on any one of these 5 categories, more detail, specific tickers, specific ETFs, drop a comment and tell me which one, and I'll make that video next. Subscribe if you haven't already. I drop investing content every week, and 2026 is going to be a year where the right information makes a huge difference. I'll see you in the next one. Let's build wealth together.